This is a good point. Res, if you can spot the support and resistance areas well, you should be able to pinpoint the swings almost. That's a very good point, and we'll get to that. We are going to get to that. And Daniel, this is another good question. Are support and resistance levels manually placed, or are they floor pivots? You can do either one. Okay. I prefer to take a look at my indicators. I prefer to draw my support and resistance levels off of price. Pivot points are an average of, they'll take the, yesterday's high, low, and close, and then divide it by 3, and then you'll get your pivot point, and then you'll have your extensions. You'll have your you'll have 3 points for resistance and 3 points for support. So they're kind of an average of yesterday's close or yesterday's price action, as well as you can use weekly pivots, which is the high, low, and close of last week, or monthly pivots. There's a certain formula that will help you set those up. But there's pivot point indicators that'll do all that for you. I like to place my stuff manually. So let's get to some charts here. Right now we're looking at the Aussie dollar on the 15-minute chart. Okay. Now, what I've got here here's the 8-period exponential moving average in blue. That's a blue solid line here. I've got the 20, that's a solid red line, and then I've got the 32 as a dashed blue line, and the 80 as a dashed red line. So, what are we looking for? We're going to cover trend trading here, and what we're going to be looking for are reasons to believe that the market is turning and reestablishing a trend. Okay, and what I've got here on my charts is actually a really great example. Okay, we've got the moving averages all cross over. Okay, right here at this point, the 32 crosses the 80, and the 20 and the 8 are already crossed over. Okay, so we've got everything lined up right here. So what are we looking for? Well, we're looking for price to pull back to the moving averages. Now, we can use any one of these moving averages as pullbacks, okay? And what we've got right here, as soon as the moving averages cross over, we've got some consolidation, okay? And the market goes sideways. Now, what do? Well, this is going to be a trend continue, since we've got a potential start of a new trend here. Okay, we need a couple of things to happen. We need a pullback, which we get right here. It stalls, and then we come up. It pulls back just a tad. This isn't like a heavy-duty pullback. Okay, but this is enough of a pullback. There's some sideways action here. So what we can do is, when we see sideways action, we're going to be looking for a breakout. And since we've got what we think is the start of a new trend here, okay, we're looking for a continuation off of this little sideways action right here. So we can place a horizontal line of support, okay, right here in this area, and we can wait for a break. Now, normally, what you'll have is a stronger pullback, something like this, where price will move down and it'll pull back, and then you can draw a trend line and you'll get a break off of that. Other times you'll get some sideways action, like right in here, and then you'll get a break of support. Now, this was an awesome entry right here. We've got price coming down and it's stalling. We've got some very small candles here, okay? And price is stalling, it's catching its breath. It pulls back on this green candle, pokes the 8 EMA, and then bounces off of it. Okay, but price is still kind of stuck, so we need a breakout. And we've got our horizontal support drawn in here. We get a break, and this then becomes the point of our entry, right here. Okay. Here is our support. We get a break of that support, so we enter here, And our stop will go just above this high, okay? Looks like that would have been right around a 14 pip stop loss. And so a lot of times when you're trend trading, you can catch a really, really nice move, okay? And a lot of times you can get about a 2-to-1 trade. You can even catch, bigger moves than that when you're trend trading. If the trend has some legs and you want to, catch a big move, you can really, really capitalize on the trend and set your target, at 2-to-1, 3-to-1, even sometimes, you get a 4-to-1 trade out of it, and that's just, that'll make your week. Now, on this trade, we would have had about a 13 pip stop, 14 pip stop, it looks like, okay? And the market comes down, pulls back again, and then moves down. Now, at this point, we would have had 14 pips in the bag right here, okay, at the bottom of this big red candle. Now, what we do at that point is move to break even. Now we're in a free trade, okay? And at this point, we're going to move our stop to break even, and that way if the market goes against us, like it did, we're going to be stopped out at no losses, okay? We're not going to have a loss on this trade, okay? We had one trade, okay, it came back, took us out for break even, and in this particular case, the market decided to reverse. Now, at this point, what we're looking for is the moving averages to be in order. We're looking for, the moving average to bunch up. We're looking for a bounce, and we get that bounce just about right at that level again. Let me get rid of this. So we'll get the bounce right there. We've got to bounce off of this moving average up here. We got to bounce off the 80, and then we finally got to close below the other moving averages. This creates a nice little swing point here. Okay. Our stop would have gone just above that. So that looks like another small stop. Right around 12 or 13 pips. So that's not bad. Okay. This will get us in on with very small stops. It'll get us in at a very good price. Okay, now this trade happened to go against us, but that's okay. Now, I want to point something out here. Okay, we've got a swing point here, and we've got another swing point up here. So we can do a couple of things. We can draw a trend line across the tops of this, okay, and then we can draw our trend line across the tops of this. Now, these are the major swing points here, okay? Now, as price moves back, it breaks this trend line, okay? And that's a very good clue that the market's turning around, which it did right here. What ends up happening, okay, this move right here was just a pullback basically on the higher time frame, and that's okay. Okay, there was a question about this. Let's see if I can find it here. There's a question about a guy trading the 5-minute chart, and it happened to be a pullback, just a pullback on a higher time frame, and that can happen. Okay, now what we've got here is essentially this is a pullback just on the higher time frame. Okay, and when we see this, we think that things are going to be turning around. All right, and that they did for a little while, and we had a trade. We got to break even. Okay, so we're in a free trade. This trade happens to take us out. Okay, we lost money on that trade, but one of the things that we can do as we're preparing. Okay, we see a swing point here. We see another swing point here. We can draw our trend lines in, and if we get a break above this trend line, then we know that the market's considering turning around and getting back, and going back up. Okay, now back here, we had a pretty established uptrend. Okay, and I'm going to go back and we're going to show you how to trade this. This is part of the reversal method. Okay, And we thought we had the start of a new trend here. It didn't pan out. However, we were able to draw a trend line. We got the break here. Now we can re-enter to the upside. Okay, and this would have actually been a smaller stop. It looks like, or not a smaller stop, but let's see, maybe a 13, 14 pip stop here. Okay, and once it broke this trend line, we would have been out. Okay, we would have been out for about 9 pips. Okay, but once it broke this trend line, we can now re-enter the market. We can enter right here, place our stop down here. Okay, for about, looks like 12.5, 13 pips. Okay, and when we have something like this, we can also target 2 to 1. 2 to 1 targets are just awesome. You know, you can lose 50% of the time. Well, actually, no, you can lose, I think, about 33% of the time and come out at break even. Or I'm sorry, 66% of the time and break even. You know, in this particular trade, we definitely hit 2 to 1. Okay, we hit way better than 2 to 1. So that would have made up for, we'd have made money. We'd have made all our money back and then some on this lost trade right here. Okay, and that's the beauty of trend trading and knowing what to look for. Basically, what happens is, you know, the moving averages cross over right here, and they remain the shorter term moving averages, the 8 and the 20 cross over, and they never come back in order. Okay, instead, you get a more or less a bounce right off of this area right here, and you get a rejection, and then it starts moving up again. So this is a great way to capitalize on reversals. So that's covering kind of a little bit of the reversal method there. Let me get to a question here. Can we place a pending order at the resistance level in order to get the gain of the signal candle? You know, that's a pretty aggressive entry. Okay, and that's something that I personally would shy away from, simply because you can place a pending order here. Okay, you can see the market pulling back. You know, it's definitely moving towards the 80. So you place a pending order here. Well, oftentimes, if the trend is weak, if it's a legitimate reversal going on right here, you're going to have your stop taken out. Where are you going to place your stop? There's really no place to put your stop loss. I mean, you're going to put it 5 pips away. You're going to put it 10 pips away. You know, where are you going to put it? The only place that you can put it is really above this high right here, which is 20 pips away. And that's, in a conservative trading method, that's a pretty aggressive way to enter the market. Is everybody with me so far? Daniel, this is a good question. Does price breaking the EMAs indicate a directional change? In trend following, not necessarily, unless it's a break of this represented, because the moving averages, in a trend following method, when the moving averages are in order and the market pulls back, this is indicative of a pullback. Okay, that's how you define a pullback. When price moves back into the moving averages when they're all in order. Okay, now the directional change happened at this point. This would have been an aggressive entry right here. Okay, to trend trade this, we would not have entered the market until, let me get rid of those lines here. Okay. As far as a trend following entry, we'd wait for everything to be moving upwards, and then we'd want to wait for the moving averages to cross over or come pretty close to doing so. On this candle right here, what happens is price moved all the way up here, pulls back, and then finds support at the 80. Okay, And this is what we wait for when we're trend following. We wait for this whole move to happen, and we wait for price to pull back and find support again for a bullish move at the longer term moving average. Now, if you'll notice right here, the 32, the 20, and the 8 were all in order. And the 32 was getting very close and moving very steeply up towards the 80. And the 80 was also starting to turn here as well. Now, price came up, pulled back, and then rejected off of the moving averages. At this point, that's where we get long. Okay? And our stop loss goes right down here below the swing point, which happens to actually be right below the 80. Now, this was a pretty tight stop again. This was right near 10 pips. So that's a very tight stop loss. Okay? And as you can see, let me move this over here a little bit. As you can see, price moved up for 20 pips there. Okay, there's 2 to 1. Price moved up for 34 pips there. That's actually 3 to 1. Okay, so we made 30 pips on a 10 pip stop. That's how you trend trade, and that's what you're looking for. Directional change as far as price bouncing off the moving averages, you want to wait until price gets free and clear of all the moving averages. You want to wait for the moving averages to cross over and change directions. Okay, and then you wait for a pullback and then a move back upwards. As far as trend trading this kind of a scenario. Now I'm going to show you guys. I'm going to back up here. I'm going to scoot back. And we're going to start all the way back here because this is a killer trend. Okay. Now we've got the same kind of thing going on down here. All right. This is, the market was in a downtrend. It was pulling back and doing a lot of funky stuff right in here. All right. Now we get our final move down, and we think we get an entry right here. We probably would have taken something like this because this is a nice, nice trending entry. Okay, probably would have entered on this little candle here. Okay, we could have even entered on this big candle because we got a nice break downwards. So it looks like about an 18, 19 pip stop. Well, market comes down and, for 10 pips and then turns around. Well, again, when you're doing this, you want to draw a trend line. And as soon as you get a break of that trend line, you know the market's changed directions. Okay, so here we've got a new uptrend. So how do you do this? Okay. Well, what we need to do is wait for price to get free and clear of the moving averages. We need to wait for a pullback and then a rejection. So we get that right at the open of this little candle right here. Okay. Price moved up, came down, then broke this trend line, moved back up again, and then we get a pullback. This candle, this big green candle here, actually comes down and pokes to 80. And then pushes back upwards. So this is the kind of thing that we'll be looking for an entry. This is exactly what we want to look for a trend direction change. This is our, Daniel, this is what we're looking for as far as a directional change. This is the kind of setup we want. This is the kind of setup we're looking for. Price comes down, makes a failure, and then breaks this trend line right here. Okay. That's the directional change confirmation right here. Okay, sure. Okay, we lost a trade, but we would have won that one. We would have won a bunch of these back here. Okay. And this is what we're looking for. Now, we would have entered the market right here. Okay. Our stop loss would have gone just below here. Looks like about 26 pips. It comes up. So we're looking for, when we're doing this, we'd be looking for a 2 to 1 trade because we can make a bunch of money on this. Okay. And it comes up for nearly 50 pips, nearly 52 pips. Okay. That was pretty close, and then it turns around. Okay. Had we held on to this, okay, price came all the way back to retest our entry, but it never got that far. Okay. It almost did. And then it moved on up. Okay. From that point, it moved up quite a bit and would have hit our target. Now, when we see something like this, okay, this is a beautiful, beautiful trend entry. Okay, I'm going to move my line over here. Right here, this candle right here, you see how price comes back, it retests to 80, and then it moves up and it makes a nice bullish candle and moves above the moving averages again. Okay, and as far as a directional change, this is our confirmation that the trend is still intact. We get price coming down, it finds support here, moves away, and it's not quite sure what it wants to do yet. It's still trying to figure out which direction it wants to go. If it wants to stay on this side or this side. Well, we get our confirmation as price pops out and it moves above these moving averages, and everything's starting to pull back over again. Okay, so place another entry here. We'll place our stop loss just below this swing. Okay, looks like 23. Looks like, yeah, about 24 pips. Okay, so let's target 48. Well, there you go. We came up for 52. So you just made two 2-to-1 trades. Okay, and you identified the reversal point. You got a nice breakout up here. You know, if this was a big candle, I would not have gotten in on this candle. I would have waited for something like this to confirm that we were, you know, definitely starting a new uptrend, and that was a great confirmation. Price came up, stalled, poked to 80, and then rejected upwards. Very nice big bullish candle here. Okay, and we got a nice move up. And the same thing here. We got a pullback and a nice move up. Now, in this case right here, we got price coming up. We hit our target. Price moved back down. It's making its way down. Find support again at the 80. Okay. At this point, we can draw our trend line. Draw another trend line. As soon as that breaks and closes above all these moving averages, happens right there. Okay. So we can get in right there. Okay. That's 20 pip stop. So we're looking for 40 pips on this trade.